Hey everybody, it's me, Gregory Mannarino, and it is Monday. Can you believe it's Monday already? I honestly can't believe it myself. These weekends just fly by. Anyway, Monday, December 17th, 2018. So here's the story right now. And although the mainstream financial channels right now are fixated on what the Dow Jones Industrial Average is doing, we'll talk about that in a moment. I want you to look someplace else so we can gauge where the market may be going. Let's start off again with the markets. Right now, the Dow Jones Industrial Average is down about 200 points. Earlier, it was down about 300 points. There was, I wouldn't say panic, but concern on all of the Confederacy of Dunces channels, especially CNBC. We did get two, not one, but two rounds of abysmal economic news. Number one, the New York State Manufacturing Index fell off of a cliff, coming in half below what was estimated. Not very good, but no surprise to you. I mean, unless you live under a rock or you believe the nonsense that they're trying to double fist feed us, we are in a global economic slowdown, including here in the United States. We are not an island among ourselves, and there's evidence of an industrial slowdown all over the place. So no shocker there, honestly. And then number two, home builder confidence hit a 3.5-year low. Again, it plays right into everything that we're seeing, but most people, they think this is it. This is the best economy we've ever had because they're hearing this from some specific individuals who keep pushing the dog shit narrative. It's the truth. That's all it is. It's not real. Nothing is real. With debts and deficits exploding, the entire environment is fake. Now, although, again, the Confederacies, all of them, are staring at the Dow Jones Industrial Average. They want you to look there. I know that's not where you're looking. Two things are going on which you and I need to pay attention to. Number one, the dollar. I always explain to you, in this environment, the dollar is very important. I can't stress that enough. Dollar being a unit of debt. We're seeing the dollar right now fall under some pressure. So what does that tell us here? That tells us that despite stocks being down right now, geopolitical tensions might be getting a little bit better for whatever reason. Although there's nothing being floated out right now, like anything with regard to China trade yet, it's probably coming at one point, or some other nonsensical thing they're going to use to prop up the market. But the weaker dollar is stock market positive, period. Number two, the bond market. The 10-year yield remains stable, 2.87 right now, and that rift in the bond market, the inversion between the 2, 3, and the 5 is actually getting better. So these are, and I don't want to sound like a perma bull here because I'm not. I don't care which way the market goes. I just want to be on the right side of it. That's it. You know that. So, you know, with these things coming in here right now, maybe with regard to this market, things aren't as bad as they might seem if you're staring at the Dow Jones Industrial Average right now. So let's put all this into perspective. Let's, of course, watch the stock market, but more importantly, watch the freaking debt market, because that's the biggest by exponents aspect of this entire market. And the debt market right now is not sending us any terribly ominous signs, although, again, the environment is completely fake. So we need to watch all these things. Let's talk about a few other things that are going on. Cryptocurrencies are catching a bid right now. Gold is catching a bid. Silver is catching a bid too. So putting this all together, yes, we got abysmal economic news today. The market has even more reason to sell off with that, but the signal from the debt market is, okay, you know what? Things are not great, but maybe they're not as bad as they seem right now. But, again, we always got to be ready for the worst thing to possibly happen. You all know that. The market's fake. The market's inflated. It's not real. The environment is going to correct to fair value. I'm just telling you what I'm looking at. By gauging the action in the debt market, I'm not too worried about what stocks are going to do today. Let's see what happens tomorrow. I mean, that's it's the truth. Anyway, or even later today. Keep your eye on the dollar. Keep your eye on the debt market. 10-year yield. Let's watch how the stock market responds to all this. And with that said, we will reconvene at the end of this lovely day. See you then.